So basically, permissionless was last week. How was that, Gabe?
So CF Benchmarks was there under our parent company, Kraken, who had a fantastic, you'd want to call it a booth, but really it was a pretty large percentage of the open floor of the conference center. And they had all sorts of cool stuff set up. And they had Williams Formula One partnership, of course, that we've been doing this year. They had the Formula One car actually like right in the middle.
I was going to ask you, was it a replica or was it the real thing? You're a petrol head.
It was a replica, or I would say like the model car. Like
Doesn't count.
It's not the actual. It's still, even though it probably wasn't, the race car that they'll be, doing the upgrades to, or, putting on the track. It was garnering a lot of attention for anyone that was coming through the area. And they had, a cool racing simulator off in the corner. They had a nice digital graffiti wall, so you could get like these spray paint cans and create kind of artwork. So there's just a lot of interesting stuff to kind of pass the time and to meet new people. And I would say it was a very focused group. I would say a lot of, let's say, new, interesting ideas were centered on, I would say, DeFi and more of an institutional space, which kind of surprised me. I saw a lot of, I think, institutionally focused projects and booths. So that was pretty neat to see, since we do tend to, be kind of more exclusive to that side versus the retail side.
Another thing that's been happening in the news, apart from this major conference that a lot of institutional crypto participants went to, is that Franklin Templeton, a very, very large investment management firm, particularly focusing, I think, Gabe, on mutual funds and retirement funds, if I'm not mistaken, has actually joined the fray and filed an application to list a Bitcoin ETF in the States. What's happening with that, Gabe?
Yeah, that was pretty big news that happened while we were there down in Austin for permissionless. So yeah, you had Franklin Templeton, which is one of the largest asset managers in the world. I think they manage close to, let's just say, $1.5 trillion or so. And just like other asset managers, they're interested in, I think, moving more to ETFs on their product suite. And it was really, really neat to see them also jump into the race, or into the queue, you could say, for a spot Bitcoin ETF. And actually, while we were down there, it kind of reminds me, one of the co-hosts of the permissionless event was Bankless, who happens to be, we happen to be a sponsor of Kraken, at least. And we were fortunate enough to get, a nice little shout out on their last week's roll up episode. And they talked about CF benchmarks and how we've created this, I would say, these reference rates that a lot of these ETF filers are using for their spot Bitcoin ETFs.
They have $1.4 trillion in assets under management. So that's kind of, yeah.
I feel like I should have heard.
Yeah, I feel like I should know them, yeah. They have filed for the spot Bitcoin ETF. So there's another big trad institution pushing for this as well. The interesting thing about this one is that Kraken is actually the oracle. So for the prices, it's actually not Kraken specifically. It's CF Benchmarks, which is wholly owned by Kraken. So Kraken's subsidiary is doing the spot Bitcoin pricing.
And one of the analogies that I thought was pretty neat is he called us like an oracle. He said, we're an oracle for the price, which of course, we're not an oracle. But if that helps, I think, kind of bridge the gap of, the TradFi world to the digital asset space. And, that makes sense, because, we do provide, a price that our licensees are subscribed to that allows them to execute either, striking a NAV or settling derivative contracts. It's very similar to how an oracle provides, real world data to execute smart contracts. So I thought that was a nice little shout out by them.
Hey guys, thank you for joining us for another episode of CFB Talks Digital Assets. We are the home of informed conversation about crypto for institutions building the future of finance. So the theme of this show is going to be another quarterly attribution report edition. Now, what does that mean? Now, as the preeminent digital asset index and portfolio index provider for institutional crypto market participants, particularly investment firms, we obviously are involved in portfolio reconstitutions and rebalances as a part of the sort of administration process of these portfolio indices. So for added value, what we do as well when these rebalances come round is also produce these quarterly attribution reports. We've been doing that for about a year. Essentially what these are deep dives into the market using our CF digital asset classification structure, the CF DAX, as a taxonomy for the crypto market. We're going to start off with a market recap, broad overall market recap of how the crypto market has performed during the rebalancing period. We're going to look at some overarching takeaways from this period. We're going to look at some potential outperformers and some particular underperformers in the period, and maybe just generally some precise metrics about how the broader market has performed. So, Gabe, if we want to start off with that market recap, how would you characterize this June to September stretch for the crypto markets?
Yeah, I would say in summary, it was all about ETF filings and court rulings. So, starting off with the big one, which happened sometime in mid-June, shortly after we published the Q2 QARs, we saw BlackRock be the first mover and reignite kind of this interest in getting a spot Bitcoin ETF approved, which of course created a lot of movement in the markets and sent Bitcoin prices above 30,000. I would say for the first time since April. We've of course kind of retraced back down to that 25,000 level of support, and now we're kind of trading range bound between 25 and 27 at the time of recording. But it's definitely, we've talked about this in previous shows. We've covered this with Sui, our CEO of the firm, and it's just the significance of this, I think, is just, it cannot be overstated. For the first time, having this vehicle that trades just kind of like a common stock on an exchange, you can access it through, your brokerage account, and it's more importantly going to be in an ETF structure, which on average ETFs just have lower expense ratios than other fund structures like mutual funds, and they're also more tax efficient. So it's a big deal to for the first time get a lot of these institutions on board with trying to get these things out in the wild again and approved. And so it's exciting to see. But we're in a waiting game now, right? So to wait and see what happens.
I mean, you can't underestimate the familiar wrapper. The ability to just look on your brokerage account and if you so choose, investigate the potential of buying crypto through the wrapper of the ETF, which everyone knows and most of us love, rather than having to obviously get involved with private keys, get a crypto wallet, an online one or hardware one, discover, explore and exchange, all of that stuff. It's just so much of a more direct experience, and that's can only be positive for crypto, right?
Yeah, you're absolutely right. I mean, if you think about this, if you want to kind of speculate or imagine what the future could hold, if we assume that the world or the U.S. gets a spot Bitcoin ETF, you could envision things like Bitcoin being adopted into a much wider audience because of the sheer fact that, like you said, it's through your traditional brokerage account, it's on these regulated exchanges, for me, as someone who used to be, in the portfolio management side of the business, there's opportunity for clients that have the risk capacity and are interested in investing in Bitcoin to have a strategic long-term allocation, across their IRAs, their brokerage accounts, or even their 401ks, because for the first time you're getting this type of vehicle. So it's unlocking, I think, a really big step. If we assume that this gets approved and we move forward with it, it would unlock it would complete a really big step towards this institutional adoption narrative that we talked about, last year a lot in our outlook. And so it's great to see, after all that we've kind of gone through last year, that we're seeing, the interest is definitely picking back up. Certainly.
Essentially, obviously, it's been a implied and sometimes a very palpable underpinning of the market, the price action in the crypto market. And there, a couple of other influences, there were a while ago, but, they're important to say because the effect of these did show at the time in terms of the price action. And now we've seen a little bit, as you suggested, Gabe, a bit of a sort of like decline or a bit of a deterioration in the price action to maybe about a couple of weeks ago before we saw this again, another uptick. The XRP ruling had a similar sort of impulsive impact on the market. And then additionally, the soft landing scenario that appears to be emerging, or did at least appear to be emerging during the rebalancing period, has actually played towards the more positive sentiment option. I think you'd agree with that, Gabe?
Yeah, no, just to jump back onto the XRP or the Ripple case, it was, that's I would say, that was a landmark, decision that we saw come out. And frankly, I think a lot of us were a bit surprised on maybe the end result, just not knowing really when this was going to, when the judge was going to make their decision. But it appears, for the first time that we had the courts say, in not all circumstances, a token is considered a security. So it's definitely not a set in stone kind of 100% sure. We're in the clear. We got regulatory clarity, et cetera. But you can't ignore the fact that this is a big deal, and it's a good step in the right direction for digital assets and trying to get a better understanding of how they should be classified. And so we just have to kind of, I guess we're going to be waiting and seeing on that one too. It makes sense that we get that impulsive price action and then a little bit of a retracement back down. But for Ripple, XRP, and other tokens, such as Stellar, who's I would say a direct competitor to Ripple, they all saw a lot of positive tailwinds over this past quarter, and including those tailwinds is probably the macro environment, which is what you were mentioning, right?
Yeah.
So
Well, I mean, because obviously that's continuing to play out as we in real time, right? So in terms of the ongoing impact, and maybe some of the short-term historical impact within the rebalancing period, how would you actually elaborate on that, Gabe?
Yeah, well, I just think we really saw I'd say more of a consensus agreement that a potential soft landing is now possible. And I am more personally in the camp that we are not out of the woods yet. It's kind of always eerie when you get the entire crowd to kind of be on one side. And it did seem like the risky assets were performing pretty well throughout the past quarter, including digital assets like crypto. And a lot of that, could be, you could probably attribute some of it to the fact that the U.S. economy is stronger than many people have feared. So remember in March we had a lot of bank blowups. We've also witnessed I'd say the most aggressive Fed rate hiking cycle since the 80s or late 70s. So there's just a lot of uncertainty that would have normally crept into, I think, sentiment and fear, and probably driven the macro environment into a worse place. And so far, it's really been, I think, a tale of the U.S. consumer just being in better shape than many have predicted. So we still have to wait and see on that one too, because it is concerning for me whenever you kind of get these everybody on the same side and everybody believing. It's usually the opposite tends to happen. I think. But you're
a classic contrarian in that case, Gabe, because it's a classic contrarian signal. Not everyone's by definition, I think it's a minority pursuit, but it's a classic contrarian signal, and quite often it does play out, right? If you've got everyone, I think there was a saying, some old folks saying, everybody's wrong if not everybody, not everybody's wrong if everybody's right or something like that.
Right. Yeah.
Just one of those things where it's just a bit too much consensus to be comfortable, right?
Yeah, exactly. So let's just wait and see. I mean, a lot of nowcast models, I think, are showing pretty, I would say, pretty optimistic readings for GDP growth. And, the unemployment rate really hasn't budged higher. And inflation and largely has continued to trend lower, although we've had some up and down readings. So we're just gonna have to wait and see. But again, we always try to tell any listener or anyone who's interested in investing into the space that they should have a longer term time horizon. Try not to time the market, because that's that can be a fool's game, or a kind of a moot thing to do.
Talking about the markets, let's try and get into some of the details here. And we want to, I believe, start off with a closer look at the CF Broadcap Index performance during the rebalancing period. With this, Gabe, before we actually move on to that, maybe we should actually give a brief outline about the variance of this CF Broadcap Index. So take it away.
Yeah, so our CF Broadcap series is, there's two variants. And the idea of both is to basically create an institutional benchmark for the digital asset universe. The way we define that is we basically screen using our exchange criteria and our free float criteria to create a list of tokens that meet these requirements. So that basically eliminates a lot of tokens that we deem as not being investable at the institutional level. So we do look at if the tokens are listed on exchanges that we deem to be reputable and meet our criteria. And we're also making sure that there's enough volume and there's enough of a free float market cap for a bigger institution to take positions into these assets. And when you look at the digital asset space, it's very unique because you tend to have such a high concentration between the two largest digital tokens. That would be Ether and Bitcoin, Bitcoin being the larger one, actually. But, we created another variant that will allow you to basically underweight these two tokens to some degree, and then increase the weighting for the bottom portion of the portfolio, and so boost those weights up a little bit. So this gives you more of let's just say a mid cap, small cap tilt on the index. But we give the users two options. You can use the free float market cap variant, which will be just a pure market cap, free float market cap weighting scheme, in which case you're going to see a lot of Bitcoin and Ether in there. And then, or you could use the diversified floating broad cap index, which will reduce those weights just slightly, but also give you a little bit more exposure to the other tokens that are making up the rest of the portfolio index.
Yeah, sure. So obviously the two variants are there to serve different needs. Clearly, the diversified variant enables potential users of the index, clients and so forth, to actually have a, if you like, broader version of the broad cap, a more inclusive version of the broad cap. Now, that obviously does dovetail onto what I'd like to ask you next, Gabe. Clearly, as we know, the OG Bitcoin makes up a somewhat overarching percentage of the overall crypto market capitalization. And, together with Ether, they pretty much dominate the entire capitalization. And I understand that the dominance has continued, but can you give me some contours and maybe some color on that?
You can study the differences between the free float and the diversified, and it will kind of tell you a story in itself. But what we saw over the past quarter, I would say, is you saw an increase in Bitcoin dominance overall in the crypto market. It makes a lot of sense since a lot of the headlines were primarily focused on the institutional adoption step of potentially getting a spot ETF unlocked here in the US. So most investors, I think, are trying to price in, to some degree, how that would impact Bitcoin's price, going forward. So it makes sense that Bitcoin, I think, had a little bit more of just overall support. It wasn't always like that throughout the quarter. There was a period there after the Ripple ruling that a lot of these altcoins, which is kind of a jargony way of saying, anything but Bitcoin. They did outperform for a short stint there, but their price action kind of faded. So in the end, over our observation window, we did find that Bitcoin dominance was another theme again for this quarter.
Thinking about Ether, where does that fit in? Clearly, it's the number two, a massive number two. But in terms of its performance, really top level, how did that fare?
Yeah, well, in this case, I think you can just look at what people or what firms are doing, and we've already seen one firm who, fortunately, we were working with file for a spot ETH ETF. So I think the roadmap is pretty clear that if we were to get a spot Bitcoin ETF, one could see Ether being
sense.
next. So it makes total sense that we've seen, I think, institutional interests in both of those two, kind of like the mega cap tokens is what I typically call them, just continue to kind of trend higher since this news was broken.
Sure. And in terms of the broader market, we've just entered, or we are in a period that generally has some kind of seasonal resonance or seasonal echoes. Because I think September is generally not the best time for buying crypto or being involved in the crypto market. Not that I'm saying, look, it's not financial advice, but generally the observation has been that Septembers have not been that great. What is the sort of take for this current September?
So I'm not too big of a seasonality person.
No,
I do find it interesting that sometimes these historical patterns are pretty apparent and repeat themselves. And so if we look at, Bitcoin on the September month, it just tends to not do very well. So we did a nice little analysis on our in the quarterly attribution report, which looked at the past 5 Septembers, and the average performance for the past 5 Septembers was -8%, and all 5 were negative. It's funny because I think at the time of recording, we look at Bitcoin price so far month to date in September, and it's actually up 4%. So it's breaking this trend, and it's a good lesson or a good thing to note that, once everybody's looking at the same thing, it does make sense that something doesn't pan out in markets. That's usually how things sometimes go. So the other main point about the seasonality was to focus on the next month. So once you get through September, historically speaking, October has actually been the best performing price for Bitcoin.
That's
it just goes to show you that if you do have kind of a longer time horizon, and you're not trying to time things,
just even 2 months, 2 months.
2 months, it's not too long. So just wait around the corner, and that has historically averaged around 16% over the past 5 years for Bitcoin. So a pretty, I would say, a pretty healthy return, especially when we look at the year-to-date figures, which has obviously outperformed other asset classes.
Sure. So what can you tell us about some of the actual leaders? Let's start with it. We're going to talk about leaders and laggards of the broader market as seen through the lens of our CF Broad Cap Index, or the two variants of that. What are we looking at in that respect?
Yeah, one thing that I think really surprised a lot of investors and market participants was the sharp rise in Bitcoin Cash. So kind of along this theme of institutional adoption, you had a crypto exchange called EDX launch, which is very just focused on doing institutional transactions of digital assets, and they have a very narrow scope on the assets that they list on this exchange for that reason. And I think a lot of folks were surprised to see that Bitcoin Cash was one of the 4 tokens that they were going to be offering on their exchange to trade. That really sent Bitcoin Cash's price. I think it rose as much as over like 200% on this news, and so that was definitely a leader. I would say another leader in the the DeFi space. We saw Maker's MKR token that rose over 70%, which really stood out compared to the other protocols in that category. So I think there's just a lot of enthusiasm with them. They're trying to build more of a presence in the Asia market, and specifically in South Korea. and
Okay,
interesting.
interesting.
Stable coins have obviously been a secular trend in the digital asset space, and they continue to do so. And Maker is one of the big operators in that space.
Sure. And in terms of the less fortunate constituents, what are the standouts on the downside?
Yeah, so you gotta take the good with the bad. Unfortunately, there was a few protocols that did not fare well at all, and so we saw on our culture segment, ApeCoin, the ApeCoin DAO, had a little bit of a controversy over the past 3 months. Basically, there was a tweet that showed some of the leaders of the community and their payouts, and really, I think, created a lot of, I would say, conflict between, the community and also the people that are running the DAO, and it sent the price ApeCoin down quite significantly. And similar to this, but not quite, it was more of like an operational issue, was the curve in the DeFi space. It had one of the larger hacks happened. So that also was one of the major laggards in our indices. So of course, we had some victories. I think, you said it in passing, it was like 2 steps forward, 1 step back, but overall we're still, advancing.
Yeah.
And
Yeah, absolutely. So just thinking still finally about the broader market, the other thing that I think stands out from the QAR, according to your rendering of it, because obviously Gabe is preeminent driver of the production of these reports, is an apparent change in regime, specifically with regards to correlations. So my understanding is that if you take the broader market, maybe if you take specific, TradFi cohorts or TradFi proxies, the general trend of correlations may have shifted during the rebalancing period. Maybe you could give us some additional detail on that, Gabe.
so every time we do this exercise, we like to do an analysis just looking at the correlations across various traditional asset classes and compare that to our market proxy, which we use the CF floating broad cap index. And we've purposely designed this index to go pretty far back so researchers can have a definitive, market proxy that they can study. And to this point, we looked at the correlations over the past 90 days and saw that they've really come down when you compare these to traditional risky assets, such as equities like the S&P 500 or the NASDAQ 100 index. So it's creating this potential for a delinkage or an unsynchronized relationship for digital assets, which is something that we saw before. I would say pre-2020 or pre-COVID, a lot of people would comment that Bitcoin was mostly uncorrelated asset or had some diversifying potential. Since then, we've seen, with I would say the macro environment, we went through a great shock where we saw a bunch of liquidity come into the market, and then we're seeing liquidity now being pulled out. That makes sense that Bitcoin and other digital assets really kind of moved in lockstep with the relationship between rates or equities or commodities or even alternatives. But now that you're seeing this kind of reversal and you're seeing other narratives take hold, we may see a potential shift in this relationship, which is would benefit, I would say, investors, because if you're looking at different types of investments that you can utilize in your portfolio, having something that's uncorrelated tends to reduce the overall risk of the portfolio without sacrificing the return to the same degree. So that's why you always had Harry Markowitz, who was a Nobel laureate, who always said I think the only free lunch in investing is diversification. That's a great quote, and it's just a reminder that you do have these relationships that are in markets, and you can study them and pick your positioning accordingly, depending on what your view could be going forward in the future.
So that was really interesting about the correlations and other standout price action, market action from the rebalancing period, Gabe. Talking about the overarching takeaways that you would spotlight following this QAR exercise that we normally do, what would you say really sticks in the mind from this one?
Well, I think, not to hammer this point home too much, but it seems like the institutions are back. So, we did a nice chart showing the open interest on CME, Bitcoin, and Ether futures, and you can see that they're pretty much at their all-time highs. They've really kind of trended upwards since the news in June. But more interestingly, is if you look at the net positioning for speculators, and what is a speculator? CFTC, which is the Commodity Futures Trading Commission, they define this as anyone who doesn't have any commercial interests to be in the futures market is considered a speculator in the market. And according to their data, the net positioning for speculators for Bitcoin and Ether is now reapproaching neutral to positive territory in this trajectory. So it's interesting to see how in this case the price action might still be going sideways or range bound, and the spot volumes are also you'd say pretty low. But if you go to the institutional market space, which is on the CME with the Bitcoin and Ether futures, you're seeing a pickup there in the sentiment positioning and also in the overall interest.
Sure. And the impact of ETH staking seems to have come up again during the rebalancing period. But what are the details on that? And has that had a sort of like significant impact on the market, maybe ETH itself or other parts of the sort of ETH-related market, obviously through ERC20s?
Yeah, no, it's been a year since the Ethereum network switched over to its proof of stake consensus mechanism. And I think a lot of ETH doomers wanted to say that, once the Shanghai update happened, which just happened recently, you'd see a mass exodus of staked ETH. Actually, what's happened is interesting. We've seen a pretty sizable increase in staked ETH, and it's kind of causing a bit of a problem to some degree because a lot of the supplies in Ether is actually being staked right now. So this idea of locking up your tokens to stake and to validate blockchains or transactions, it creates this reward mechanism which is called the staking yield. Right now we're seeing that around 3 to 4%, depending on who you're looking at or which staking provider you're with. But it fluctuates based on the demand. And right now the demand to stake your ETH is pretty high, and it continues to kind of grow exponentially. So I think developers are trying to figure out how to possibly even slow down the amount that's being staked. So we'll just have to see what happens. But it is not what I think the doomers were predicting, where once you opened it up with the Shanghai update and you could take your Ether off the staking nodes, you would see this mass exodus and nobody would, there'd be like no staking. So it's been the opposite. So interesting to see, but let's see if this new issue that we're facing, if it continues to kind of cause problems, or what kind of solutions the developer community will have for them. It's going to be a good thing to follow.
Sure. Just on that, Gabe, briefly, in terms of the actual market impact, maybe let's talk about the direct impact on ETH. How exactly is the transmission mechanism? How does it actually work in terms of rising staking and the impact on price, and maybe the negative impact on price, just as you've been implying just now?
Yeah, so the price actually is kind of trended sideways, but the way you can, as a validator, the way you entice people to stake with you is to offer them, a yield. And I think that if you have an increase in yield, you might inherently have, more people wanting to stake with you. But from what I understand is that it can also create a riskier proposition, because the greater the reward, the greater the risk. So that type of dynamic also exists in the staking world, where typically the more well-known validators offer lower yields, but they're the ones that that most people would trust to not mess up, a block or validate something wrong and potentially lose your staked ETH. So there's that reputational aspect, and there's also the aspect, I think, of just wherever the market yields at. And
Yeah.
if the risk-free rate's around 5.25, 5.5, and the staking yield is around 3 to 4 on
Yeah.
Ether,
Yeah.
you could see
Yeah.
how there's a little bit of a discount on the yield, because I think there's just a lot of demand to stake your ETH. And
Yeah.
so it kind of gets reflected in the yield right now.
Sure. Perfect. Perfect. That's some golden information right there, I think. Right. So just widening out our focus again, Gabe, as we sort of been going, focusing on one aspect of the market, broadening. Let's broaden it out again and talk about something which I think most crypto, watchers and participants will want to know. Where are we in the market cycle? Are we nearer the bottom? Have we passed the bottom? Are we now sort of, heading towards an uptrend? Or are we basically facing another downtrend? Based on, of course, the intelligence that is being emanated from this exercise of quarterly attribution reports.
This is a great place, I think, to kind of wrap up the pod, because I think we can now take a step back on our lens, zoom out, and get the perspective of, like you're saying, where are we at in this market cycle? And so what I did here is we just kind of compared, various asset classes. You had global equities, you had global fixed income, global commodities, and we just looked at the drawdowns since their 2021 peaks or watermarks. And what you can see is that maybe crypto has outperformed year to date, and a lot of folks may think, okay, well, this rally is really overextended, because you can see, if the digital asset market as measured by our broad cap index is up over 50% at the time of recording, there's a pretty big gap when you compare it to the equity markets. They might think, there's maybe no more upside potential for digital assets, or there needs to be more of a retracement. What's interesting though is that if you compare it to the drawdowns on the road to recovery, you'll see that the crypto market's actually been lagging its recovery cycle compared to these asset classes. So if you look at the equity market, for example, if you look at the global MSCI ACWI, you'll see that it's kind of a stone's throw away from being near an all-time high. When I say stone's throw, it's in its single digits, so like 7 or 8% at the time that we did this analysis. Whereas the digital assets had I think over 60 or 70% left to go. So quite a bit of a gap on the actual recovery side for crypto, and that leads me to believe that there is still more upside potential, because you've seen such a there's just such a high watermark, and people forget that digital assets need to get to reach all-time highs.
Sure. Perfect. And it's we still got 3 months to go before the end of the year. Feels like we've had a whole year already. But that's been amazing, Gabe, as usual. So Gabe did mention the importance of the potential first Bitcoin, it's going to be Bitcoin, let's face it, first Bitcoin ETF in the US, and in the context of the appearance of our CEO, Sui Chung, on the podcast. I can't remember the episode number, but you can find that episode if you want to catch up with, again, from my mind, a lot of information there that you can't actually get elsewhere. If you want to catch up with that episode, navigate to the website, cfbenchmarks.com, find video, podcasts, and you can find that episode really quite easily. Aside from that, of course, we've been doing this podcast on this edition. This is the QAR edition. You can go to cfbenchmarks.com, go to news and insights, and then there's also a drop down. In that drop down menu, you can find research, and in that sort of like button, you'll find all of the quarterly attribution reports that Gabe has written, including obviously the latest one. So if you need more information, if you want more information, if you're interested, got any sort of like additional need to find more insights, the latest QAR for June to September 2023 is available there. Beyond that, of course, we do have these podcasts, and you can find them all on the website. One special event I can mention now is that I believe most of these podcasts are now available on Spotify. We've now sort of like branched out. We're coming of age. We've become, sort of like real podcasters, if you want to put it that way. So you can actually navigate to Spotify on browser, or if you've got the app, just search for CFB Talks Digital Assets, and you'll find all of the episodes that we've actually produced in this podcast. So we hope you do that and hope you enjoy those. We do have the weekly newsletter as well, sort of like that's the shortest, shortest frequency content we do. Gabe also prepares a monthly market report where he sort of produces a lot of charts and some bullet points as guidance for the investor, delineating the performance of markets in that monthly window. And then, of course, the quarterly attribution reports as well. Any other additional information that interested parties may need about CF benchmarks or the indices that we produce are, of course, available also at cfbenchmarks.com. So, guys, thank you very much for joining us. And big thanks to Gabe and to the team, of course. We obviously couldn't do any of this without them. So big thanks to all of you guys as well. And we hope you join us for another episode of CFB Talks Digital Assets. Cheers. See you soon.